What's up, millionaires? Alexander Victor here with another moment of financial zen. What we witnessed last week was nothing short of historic. Truly one of a kind. I'm not sure if we'll ever see this again. There are too many topics to cover, which is incredible to say because we're talking about one of the most boring topics, finance. Hedge funds have had its tongue snatched to reveal where the pickles were, underneath the tongue, the whole time. And the pickles from last time are there too. I'm going to break down what happened last week and how this has fueled the next rocket to the lunar base, with my prediction of social capital at the end of the video. So, sit back, take a deep breath, and arrive in a moment. You've made it through another chaotic week. Congratulations. This is your moment of financial zen. GME short squeeze. This was just insane. GameStop, that's what everyone's been talking about. Even my dad, who only literally watches ESPN, knows about it. It's crazy. You gotta respect the balls in the Wall Street bets culture. And frankly, I'm proud to be part of it. To catch you up on the short squeeze, short squeezes result when short sellers of a stock move to cover their positions, purchasing large volumes of stock relative to the market volume. Since covering their positions involves buying shares, the short squeeze causes a further rise in the stock's price. This newly increased price can trigger, in turn, additional margin calls and short covering, which in turn may drive up the price, still in a vicious feedback loop. Short squeezes tend to happen in stocks that have been expensive borrow rates. These expensive borrow rates can increase the pressure on short sellers to cover their positions, and further adding to the reflective nature of this phenomenon. Those greedy bastards, Centron, Melvin Capital, responsible for shorting GME at 130%. How is that even possible? Let's imagine this happened in the real world. All that translated. The Wall Street suits got caught with their pants down trying to fuck Marcellus Wallace. But Marcellus Wallace ain't no bitch. They got squeezed into oblivion. Pure ponage. $70 billion.
Okay.
Nah, man. I'm pretty fucking far from okay.
This caused hedge funds to literally cry on air in front of the people, forced on by the power of the people. But it wasn't over for the hedge funds. They weren't going to go out that easily. You see, these hedge funds are the sugar babies of clearinghouses. And Citadel, which is the evil sugar daddy of Robinhood, isn't going to let its sugar babies and Melvin and Centron go under. On Thursday, Citadel made Robinhood CEO block users from buying shares of GameStop and only allowed the sell, causing the price to drop, and even selling people's stock without their permission at the lowest possible price, allowing hedge funds to pick up their asses. But it wasn't over yet. Papa Elon, Chamath, and for the first time ever, we have actual video footage of Congress representing the people, making it rain lawsuits on Robinhood for pulling such a stunt. CNN char-grilled the Robinhood CEO on his 18th century den. Seriously, is this the CEO of Robinhood? Is that him? Live broadcast. He had to know it was coming, and this is the best setup he got? Chris Como grilled him on live TV, making him sound stupid as fuck. He fell on a sword to protect Sugar Daddy Citadel, and the best explanation of what actually fucking happened came from the CEO of Webull. Chamath hit it right on the head with his interview with CNBC, embarrassing them and telling it how it is. We are getting fucked, and we have been getting fucked by the financial institutions for far too long, and it's now our turn. And Chamath is the reason why I brought you guys here. I said it before, but here it is again. Chamath Palihapitiya is the owner of Social Capital, a billionaire, early Bitcoin investor, Facebook co-founder, AOL Instant Messenger pioneer, and owner of Slack and the Golden State Warriors. He's fucking Midas. Everything he touches turns to gold. Listen carefully. His company just debuted IPOD, IPOE, and IPOF late last year. These funds to invest in the most profitable innovations for this decade. IPOE will do a reverse merger with SOFI, a new fintech platform, which is what I'm looking for after Robinhood fumble. SOFI looks to deliver loans and stocks. I have and will continue to buy this up like crazy. Chamath is well established and is not embarrassed to say whose side he's on. Our side. All of these funds are still under $30. Still, these newly made millionaires on Wall Street bets will be looking for someplace to put their money, someplace they know they can trust. And Chamath has proven that we can believe in him. His funds will compete with ARK Invest, Cathie Wood, as far as a visionary goes. The rocket is fueled. This is the final boarding call. T-minus 2021. If you want to know what's after GME for the long term, it's here. Do not try to jump on the ship after the engines have started. It's too late. These funds, dare I say it, have deep fucking value without the immense risk of a short squeeze. Robinhood racked up 100,000 one-star reviews after they pulled this stunt. Millionaires and investors are not happy, which means there will be a Robinhood exodus over the next 2 years as the two lawsuits creep closer and people draw down onto positions and margins to switch to a brokerage that acts more like a real Robinhood and less like the Sheriff of Nottingham. Millennials and Gen Zers will flee for other apps like M1 Finance, which is distribution based, and Webull, which is very intimidating, but will look for an option that's easy and simple to use. SoFi has that. And because Chamath owns it and he backed the movement, that's the likely move. And here is my price prediction for the social capital funds. Coming in 8th place on my list of Zen picks, IPOF, a predicted return of 182% by January 2022. If you invested $1,000, that will return you $2,821. Coming in 6th place, IPOD, predicted return of 193% by January 2022, turning your $1,000 into $2,934. And coming in 1st place, IPOE, SoFi, bear case, 462%, putting the price at $141 by January next year. Bull case, 560%, putting the stock at $166 by January 2022. And with the 95% confidence level, I predict the price to be at $162.11 plus or minus 2.5 percentage point, turning your $1,000 investment into $6,343 by the beginning of next year. This is the move. Should you buy? That's for you to decide. Do your research. Ask a paid professional for their thoughts and leave your answer in the comment section below. If you want to know how I got these numbers, hit me up on the Zenvest Discord in the details section below. And don't forget, invest in yourself. Your future depends on it.